Hey everyone, happy Friday the 13th. Wow, for a ominous day, it actually was a pretty good one for the markets. And so far this year, everything seems to be going along pretty well. So I've missed a couple live streams here and there. This is the first one of the year. But so far, just checking in on the markets, which we'll do together here, things are going all right. You know, the dollar's down, Bitcoin's up, gold's up, the market's up. What's going on? What changed? We got CPI data coming in. Got a whole bunch of interesting things to cover this week. So yeah, thanks for tuning in, and let's hit it. Before we start, two little things. Number one, give that like button a hit if you're watching on YouTube. Really helps the algorithm, gets it out to the subscribers on my channel who don't get the notifications. And secondly, we're going to be doing a Bitcoin giveaway middle of this video, but there's a bit of a catch. It's not going to be something where I just like pick a random name in the chat. If you're watching, and you got to watch, unfortunately, to be a part of this giveaway. If you're just listening, you're going to miss it. If you're watching, at some point during this stream, I'm going to flash a number accidentally on screen. And that number, if you send me an invoice via Lightning, that number in Satoshis, whoever is the first person to either DM me on Twitter or drop a invoice in the Discord, I will pay that invoice for the amount that I'm going to flash in Satoshis. So, good little giveaway. Who knows how much it might be worth, but going to try and do a few more of these this year. And yeah, let's see who catches it first. It'll be interesting to see. So today we are going to be covering kind of three or maybe two major topics and a couple of quickie stories for the week. The main ones we're going to be covering are this CPI print, which came out this week. It was kind of in line with what people expected. Inflation is on its way down. That doesn't mean prices aren't still going up, but it just means that they're going up at a slower clip. It's decelerating. We're going to dive into why exactly, what elements, because CPI tracks a whole basket of things. What elements are slowing down and kind of bringing inflation around a corner? And then we're also going to talk about Grayscale Bitcoin Trust and a whole bunch of drama surrounding that, because despite a really bullish week for Bitcoin in price action, a couple of the biggest players in this space are facing some insolvency challenges, and unlike all the other ones, this big player, which is Genesis Capital, has actually yet to declare bankruptcy. And we're going to dive into why maybe that might be, all the different players involved, and kind of just a breakdown of how this all happened, because it's a little bit different than just BlockFi and FTX and all these other stories. And who knows where these stories might end up in the next few weeks too. But interesting to watch, give you a little bit of insight, and curious what your guys' opinions are on all this stuff as well. All right, so let's take a look at some charts really quick. So I don't know, 2022, like this is 2022, just like up, down, up, down, up, down. But you know what? 2022, pretty brutal year. Worst year for stocks and bonds combined as like one portfolio since I believe 1860. But pretty much beginning this year, it seems basically after all the tax loss selling, it's been a pretty straight ride up for the market. So, if you bought beginning of this year almost any stock, you're probably up right now, and it looks pretty decent. So I'm not going to dive into like a whole bunch of technicals here. I have started trading again a little bit just myself, just to kind of get back in the wheelhouse. I think there's some other things that are interesting, which I'll talk about. But the thing that's kind of interesting about this move up is essentially all for the last year, we've had this downtrend line on the S&P 500 and NASDAQ and the QQQ, and it seems we'll have these little bear market rallies, we'll run into this area of resistance and then make a lower low, and so on and so forth. The last one we made wasn't quite as deep of a retracement as the other ones. And so we run up, we kind of hit this line again. I mean, we've had so many touches on this line. A lot of people have to be watching at this point. The thing that kind of changed is in December, during all the tax loss selling and all that stuff going on, we did put in a higher low here, which essentially means that there's now a base of support on the S&P 500. And that base of support is new, because essentially every time we've run into resistance, we've just ended up going lower and lower and lower and lower. And it's correlating with a whole bunch of interesting things happening with charts. Basically, for a lot of different things, there was sort of this bottom that was printed in October, which we've talked about sort of in things like the US dollar or bond yields or other currencies. And so now we're starting to kind of see this constructively a little bit bullish lean on the market here. But I would still say all is not clear until this line is clear. And you can see if we jump to the tech sector, a little bit different. That bottom we set here is not quite as nice, not as nice of a higher low as the S&P 500. Bitcoin this week, after trading boringly sideways, which I kind of hated at first, but I was kind of glad about because I had probably the longest period in the last like 3 years of not checking the Bitcoin price. I couldn't care because it was flat, basically. It was trading like a stable coin. It's picked up some steam this year. And actually, if you break it down on like the daily chart since the first of this year, it's essentially just straight up this whole year. Running into a 200-day moving average here. But this isn't a technical stream. I'm not a technical expert, but I just wanted to acknowledge that there are some changes in the market, and we'll go over a couple other ones too that are kind of interesting. The VIX, which measures the volatility of the stock market, how many people are shorting, is breaking to lows basically not seen since a whole year. So the VIX is breaking lower. It's closing the week, and it's a long weekend we're going into at the lows here at 18, which is just a sign that people are entering more riskier positions. So shorts are closing out. We've seen kind of smaller short squeezes in a few names. Some of the Bitcoin miners doubled this week in price. And then kind of on the back of that too, as you're seeing the VIX come downwards a bit, the DXY, which measures the strength of the US dollar versus all other currencies, is just been really weak. So we kind of had this seemingly blow off top kind of September, October-ish, and the US dollar has just been falling. And we talked about this dollar milkshake theory and how the dollar was the strongest currency of all the bunch. Well, that's been flipped on its head in about a few months here. It seems that market participants either want to take more risks in this market, or they're seeing other currencies as de-risked, likely because they're all starting to raise their rates as well. So you got DXY down, you have the VIX at lows, and then where is my little gold chart here? Do I have a gold chart on here? Gold, there we go. Gold has just been ripping. So basically around the time the dollar peaked, gold kind of bottomed out here at 1600 or so, and gold has just been on a rip upwards. Very little, area to kind of enter accordingly. And it's basically on its path to all-time highs here. So I think all this combined is sort of telling you a bit of a story on where the market's going. And even though the Fed is coming out and saying, we still need to raise rates, we're not done yet, the battle of inflation is not won, the market is telling you, I don't know, like it looks basically like, interest rates rising is no longer the risk it is, that the majority of the rate hikes are now behind us. And now the real question is if inflation is sticky, then the least of our concerns are rates. We have to hedge against, persistent inflation. And so I think basically the metaphor I would use for where we are in this market cycle is essentially, imagine a bunch of people are inside of a room, and they're all different types. You have one person representing gold, one person representing Bitcoin, stocks, and all that. And suddenly someone comes in, the boss of the whole room, let's call it the Fed. He comes in, he starts cranking the thermostat up, and he says, "You're welcome to leave the room at any time, right? And, I'm just going to keep raising the temperature every few months, and then, we'll see who remains here at the end." And you had, one person after another carried out of the room, and these people might be like the tech industry, certain really highly overvalued stocks. And you had some casualties last year, but most people kind of stuck around in the room, right? And, every few months, the Fed's coming in, it's cranking up the temperature, right? It's getting hotter and hotter and hotter. It's coming to a swelter. But people are now seeing basically that, well, hold on, like the Fed can't really turn up the temperature much higher than it is already. He's almost maxed out the thermostat. This is almost as much as the economy can take. And so what the market is predicting is essentially the Fed's going to stop turning up the thermostat, and the Fed's just going to leave it there. And so we go from an area of this impending anxiety of how hot the room is going to get to this anxiety of how hot is the room going to stay. And I think basically that transition is essentially the market saying the Fed's not pivoting per se, because a pivot would mean that rates go down, but the Fed is basically on track to kind of cool it and just see what happens for the next few weeks, months, possibly years at this current level of interest rate, and see what it causes. Unemployment so far during the raise has been fine, but we don't know if unemployment can stay at these low ranges while interest rates stay at 4.5% to 5%. So my whole take on this is, I don't look at all this immediately with like a bullish bias or a bearish bias and say it's all just a bull or a bear trap. I say basically, I think we're exiting a certain period, and we need to see from now, who's going to be able to stand the temperature in this room. And so far, the people who seem to be benefiting from it are obviously some of these stocks that pay out dividends, that have consistent cash flows, that offer a product to consumers where, even in a recession, the demand is not going to change that much. And that's why I think, things like the Dow Jones have actually, been fairly strong here, on track for a weekly trend change almost at all-time highs. So these kind of traditional boomer Berkshire Hathaway companies are doing fine in this environment. They can kind of see the light at the end of the tunnel before everyone else. And I think now, this week especially, you're starting to see kind of the things turn in terms of the risk takers in the market, and the people willing to stay in that room are saying, well, maybe we can take a risk on Bitcoin or tech stocks or something like that. But, we'll see. We'll see. My ultimatum on this essentially is, the fact is that you can't just keep rates at like 4.5%, 5% forever. And Stanley Druckenmiller had a really good piece where he was talking about this, and he was essentially saying, look, by 2027, if we just keep interest rates at 4.5% or whatever, and I think he said 3.8%. So if the Fed keeps the rates at 4.5%, the cost to finance the U.S.'s debt, just the interest payments, will become bigger than the entire cost of Medicare for the country. And then if you go further into the future, because debt just compounds and compounds and compounds, the cost to just pay the interest of the debt will eventually become bigger than Social Security liabilities, which is just unfathomable. So at the end of all this, we're going through this period, and it's been really rough last year, and it's been, kind of an interesting start to this year. But the end game is that the rates mathematically have to go down to zero. And if they don't, the only other option is essentially austerity or defaulting on the debt. And we just know that the U.S. is never going to, willingly have smaller budgets. The Democrats are not doing that. The Republicans are not doing that. Things become more expensive. There's always more bloat in the political system and the paradigm. So the governments are going to keep needing more money. If the tax base isn't providing it, and the interest keeps getting more expensive, there's only really one way out, and that is to print or to default. And I just don't really believe that the U.S. is going to go the way of defaulting, and essentially that just means that at some point something breaks, and that is the excuse or the reason for the Fed to just go back to the status quo, which has been quantitative easing and low interest rates. So don't try to time it. It's really hard to time it. It's really hard to understand what is a hint and what is not a hint. But the markets kind of tell you where things are going, I think, over time. And, we'll see if this rally is more than a bear market rally, or if it is the market pricing, and essentially we're going to go back to quantitative easing because there will be a recession end of the year, and then, it's back to the same old game plan, right? If there is a recession of some level, then I would assume that the rates are going to be at least half of what they are right now, and that's impetus to basically move into riskier assets. So is what it is. All right, that's my technical spiel. But let's dive into inflation, because this has been the thing, right? The Fed is always saying we got to raise rates because the raising rates kills the inflation. And we had decelerating inflation in December 2022, and I want to just cover some of the things in there that you might find interesting. The one that, God, everyone has been talking about lately is the price of eggs. The price of eggs have gone up 60% since December 2021. So year-over-year price changes, price of eggs have gone up 60%, which is pretty insane. Although a big part of that has to do with avian bird flu going around, and so essentially your supply is just getting cut off. That's a passing thing. I wouldn't go out and invest in egg futures right now. I don't know, I think those prices will come down. It seems to be, I guess, more location specific too, because I'm seeing in the US people are paying, $6 or $8 for 12 eggs. US, but here you can get free range eggs for still about, I think, 6 or 7 Canadian. So I think it depends where the what your agriculture situation is like. Curious in the comments, tell me how much you last paid for 12 eggs that were free range or regular or whatever. I'm curious what people are paying on that. Other items in here, maybe I'll zoom in a bit so you guys can see it a bit better. All right, other items in here, fuel oil. I guess it's just oil for your car. up 41%. I don't know if that's different from petroleum, if that takes something else. Butter and margarine, 35%. Airfare, obviously up, year over year because of the demand and the cost of fuel. Utilities have gone up a lot. Public transportation up 20% this year, which is pretty astounding. I don't know why public transportation would be up so much. I guess cost of fuel, electricity, and then poultry as well. And this is one of the things I couldn't quite figure out as well, is like, why are the price of eggs up so much higher than poultry if essentially they have very similar supply and demand metrics? Like you just have a chicken as basically the intermediary here. Why is poultry not inflating at the same rate as eggs? Like the avian bird flu just straight up kills birds, so you would expect a shortage there on the scale of eggs, but maybe it's different. I'm not sure. Food at home, 11%. We're all feeling that one for sure. Primary residence rent up 8.3%. However, I think that situation is very different in cities. So curious if you guys are seeing rent increases like that. And then down to things that have actually gotten cheaper. Beef has gotten cheaper. It's lower by 3% this year. Gasoline is actually lower than where it was in December 2021 at this point. And then, televisions are down 14%. Used cars and trucks, that little bubble is popping as well. So, yeah, kind of a range of things. Obviously, generally there's just more inflation. But a lot of it looks tied to food production. And I don't know, I think those variables change. Essentially, I think if there is an opportunity to make 59%, more money on eggs, and if the input costs to, creating eggs aren't really going up at 59%, which we're talking about land, grain, cost of poultry, then there's an opportunity there for people to just have more eggs, and that gap gets closed. And so I think eggs, I would say this time next year, I don't really call for deflation in many things, but I think it'll be, I think a carton of eggs will probably cost less this time next year than they do now, if that really matters to anyone. Michael Burry was saying inflation has peaked, but it is not the last peak of this cycle. We're likely to see CPI lower, possibly negative in the second half of 2023, and the U.S. in recession by any definition. Fed will cut and the government will stimulate, and we will have another inflation spike. It's not hard. So he thinks we're en route basically to what I was talking about earlier, which is more money printing because we have a recession and everyone needs to get paid. So what I'm really curious about is where the technical recession comes from. So you'll remember last year that we had two quarters of negative GDP, and essentially that's supposed to technically qualify as a recession, but powers that be said it wasn't. And then we had a couple positive quarters. But I think one that the Fed is more looking at is unemployment. And the question is where are the job losses going to come from? Because we've had all these tech companies lay off people, and the unemployment rate is not really affected by it so much. And the way that I look at it is I think it comes in this period of waiting in the hot room where essentially, we have all these refinancing things coming up. Businesses getting loans over the pandemic or just revolving loans and lines of credit. You got to refinance at 5% prime rate plus whatever, right? And you got to ask yourself, that's going to cut in the margin of my business. What do? Do I shut down shop? Do I lay off some people? And that is a more widespread effect on unemployment, rather than I think what we've been seeing in this concentrated amount of tech sector layoffs. And I think that essentially comes from two big elements: the stock price going down. So essentially stock-based compensation doesn't really work as well. And so your ability to pay employees through one method is kind of gimped if your stocks dropped 80%. And the other method is I think a lot of these tech companies are very forward-looking. And so they get a lot of pressure from their boards to essentially do these measures and cut quickly. And I think the other thing is I think tech companies are very, very bloated. I think it's very obvious from everything going on with Twitter that they cut 70% of their staff and Twitter works operationally fine. So I think that sent out a big message to a lot of tech companies. And even before that I think tech companies in particular have bloated employment counts. The question is maybe those people weren't essential, but at some point you have to cut off people that are essential in the business just to stay solvent. And I think that's the thing that really starts moving the unemployment rate higher, which would classify and kind of begin a recession. All right. Yeah, we're gonna move to a quickies section here and talk about what is going on in the rest of the world and other quickie news stories here. Um, so Japan has kind of eased up on the yield curve control. You might know Japan has a system in place where they buy bonds at any price just to keep the yields under a certain level. Um, this has all sorts of effects, but surprisingly, it is not causing a ton of inflation in Japan. I've always tried to wrap my head around that, and I still can't quite figure it out. It might just be because Japan's economy functions a little bit differently, but if you are printing endless amounts of money and it's not causing severe inflation or a weak currency, something else is at play. So, love to know what people maybe smarter than me know about this. I still can't quite explain it. Like, if you have QE infinity, how does that not lead to just infinite price depreciation? Because it sure does in a lot of other countries when you start doing that. But anyways, Japan has eased up on their rate ceiling, essentially letting bond yields go higher. And what has essentially happened is they have they have these budgets of how much they think they're going to spend on buying bonds from the government, buying debt, the central bank buying debt from the government in Japan. They have estimations of how much they're going to spend, and they spent as much as they were planning to spend in 1 month in about 1 day, with the yields kind of spiking over that ceiling they had set, which is about 0.5%. So something to watch there. I still don't get the full mechanics around it, so I don't want to act like this is predictory of something, but just something kind of interesting to watch for. Oh, look, a random number popped on screen. Another interesting story is crypto billionaires in 2022, or maybe billionaires, mysteriously dying. And so a couple people have kind of noticed that there have been a surprising amount of crypto related CEOs and executives dying in the last year. So Nikolai, one of the co-founders of MakerDAO, was mysteriously found dead on a Puerto Rican beach after tweeting intelligence agencies were after him. The next billionaire was a broker named Javier Biosca, found dead in Spain, and he was being investigated at the time for the biggest cryptocurrency fraud. On November 23rd, a co-founder of Amber Group, I don't know what they do, Tian Kolander, died mysteriously in his sleep. And then just 2 days later, a Russian crypto billionaire, I can't say that name, I'm not going to try, died in a helicopter crash. I think there was another Bitcoiner, early Bitcoiner, that also died mysteriously as well. Another death that made headlines was Park Mo, vice president of Vidente, largest shareholder of the South Korean exchange Bithumb, was found dead in front of his house in the early morning. So, really weird. What do you think's behind that? Do you think the FBI and the feds or the Federal Reserves are working together here trying to end these crypto people? I don't know. That seems a little conspiracy theory-esque, but all these deaths are just so odd. Very, very weird. Young guys mysteriously dying, found dead. Could be something to do with investors maybe sending hits after these people, but curious what you guys think of this. This is just a bunch of very weird coincidences. I have some experience dealing with the whole quadriga nature of everything, but this is something else. 2022 was a year of random deaths for crypto billionaires. Nexo offices were raided this week. So Nexo is one of the last standing crypto yield platforms like BlockFi and all these other ones, and they're based out of Bulgaria, and their offices were raided. A bunch of people have been withdrawing funds off of it because it's kind of, sketchy, and it doesn't look good for Nexo to have your offices raided. And now fully under investigation. It kind of sounds like basically what they're going after the company for is accused tax violations, money laundering, and bypassing financial sanctions associated with Russia. They've denied any wrongdoing, but it doesn't look good. And when you start getting a whole bunch of feds in your office looking through things, even if they're not guilty of all these things, tax, money laundering, financial sanctions, there could be some fraud in the balance sheet that gets found out as they have to kind of disclose all this stuff. So hot water, don't keep your crypto on yield platforms. I think that was like a pretty obvious lesson from last year at this point. Okay, uplifting stories, because there is one, and there's probably more, but this is the one that I thought was really interesting. Um, a national park in Congo is mining Bitcoin through hydroelectricity. And so there's this park called Virunga National Park, and it's basically just had a series of like really crappy things happen to it. But essentially, the way that these parks operate is they need tourism revenue. Tourism revenue is about 40%, and then you get maybe a little bit from the government and other organizations, but basically, starting in 2018, they were hit with basically kidnappings going on nonstop, and so tourism got shut down in Congo. 2019, they had to shut down tourism because of Ebola. 2020, the rest is history because of COVID. And then for 4 years, all of their tourism revenue basically collapsed. And so they needed to find a solution to this. And what they ended up coming across is, well, hold on, this park generates all this energy. Why don't we try and mine some Bitcoin and, build like a hydroelectric plant and start doing this? And so they've been mining Bitcoin, and that has been, they got some secondhand servers. Maybe some people are renting them mining machines. They built this power plant to kind of harness some of the hydroelectricity, and they are basically staying open thanks to that as a potential revenue stream. So I think that's so interesting. I still think I think for Bitcoin mining to be viable at this point, and especially over the next year and last year, you basically can only move to almost free energy sources. And I would say it went from, 2 years ago, it was profitable to mine in an apartment, right? Because if you had electricity under 40 cents a kilowatt hour, Bitcoin 60,000, the difficulties somewhere, right? You could profit just by plugging something into any wall and basically using electricity at whatever prices. And then price collapsed, mining difficulty kept going up. It became only profitable if you were under 15 cents. And this has just kept going down to basically your electricity has to be around 7 cents per kilowatt hour to be profitable. And so basically no grid will give you that. You have to arrange basically a good electrical contract within a certain district to get a good enough price to do that. But we're moving to a point where that's going to just keep moving down, 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 down during especially this next year, as I don't really think Bitcoin's going to go crazy, and I think hash rate just hit another high. The profitability to mine just gets harder and harder and harder for miners, that essentially I think if Bitcoin miners want to future-proof their operations, they will essentially have to all move off grid. And so what's going on here where they're mining this in a park, all you really need is a bit of satellite internet to download a few blocks every now and then. This is going to be the standard moving forward. And essentially what it is going to do is it's going to decentralize a lot of the mining industry in ways that I think a lot of people have been concerned about. For the last 13, 14 years, the narrative on Bitcoin has been, oh, China controls all the mining. Oh, now the US controls all the mining. Well, now basically wherever there's cheap energy, because cheap energy, and hydroelectric is probably the best one, short of nuclear, just because it runs 24/7, it's very predictable, unlike solar and wind. And I don't know, I think a hydroelectric power station might be cheaper to set up than a solar station because of all the batteries and whatnot. I'm talking about solely off-grid, power generation sources. Hydroelectricity is probably going to be a major source of how Bitcoin mining is done, and that essentially changes the mix of most Bitcoin mining to all green energy. So impressive. It's crazy. Like, this story just broke. No idea that Bitcoin mining was going on in Congo. I don't know the scale of it, but it's going to get bigger. I mean, I think of all the amazing waterfalls and hydroelectric sites in South America, and being able to monetize that will bring opportunities to some of these really remote places. So yeah, kind of cool. All right, a quick sponsor break, and then we'll move on to the last story, which is talking about GBTC. This week's show is sponsored by Bold. Bold is launching a credit card entirely backed by your Bitcoin stack, allowing you to tap into the value of your Bitcoin like a line of credit and live day to day on a Bitcoin standard, all without having to sell a single Satoshi. Bold's innovative approach even lets you hold keys to the Bitcoin in a collaborative custody multi-sig address, so you can verify for yourself that your Bitcoin is safe and free from rehypothecation. There's all sorts of other killer features the card is launching with. So if you want to support this show and be the first to try it upon launch later this year, take 30 seconds and sign up for early access at getbold.io. Cool. All right. Yeah, new sponsor. Go check them out. Getbold.io, Bitcoin backed credit card. Could be cool. I'm not selling you anything. You just have to join a wait list and then we'll see. Okay, so let's talk about the Grayscale Bitcoin Trust and Gemini and all these different elements because it's kind of hard to pinpoint one story to introduce this with. But essentially, you have a couple different firms. You have the Winklevosses, which own Gemini, which is a crypto exchange, and they own something called Gemini Earn, which is a yield platform. And then you have this other guy named Barry Silbert, who owns an entity called the Digital Currency Group. And the Digital Currency Group owns two companies called Grayscale and Genesis Capital. So we're going to go into what all these are and why it matters for Bitcoin and some other things in this space and some interesting precedents that it sets. But let's just first off start talking about GBTC. So if you don't know what GBTC is, really quick, it was for the longest time the only way you could get exposure to Bitcoin through your stockbroker. Because there was no Bitcoin ETF for the longest time, there still isn't a spot ETF. The only way you could get exposure to Bitcoin if you didn't have an exchange account was through GBTC. Nowadays, there's things like MicroStrategy. You can buy miners in Canada and a lot of other countries. We've approved spot ETFs, so you can essentially just get a derivative product that just 100% tracks the cost of Bitcoin minus like a small yearly fee. GBTC was the best game in town because essentially this was how you got tax advantaged Bitcoin in your long-term IRA accounts if you're in the US or your tax-free savings if you're in Canada. So GBTC, again, largest fund or way to buy Bitcoin. So really liquid too. I think right now the Grayscale Bitcoin Trust holds about 3 to 4% of all Bitcoin that will ever be produced in all of existence. So it's pretty significant how much is in the hands of this company going through a conflict right now. And so the way that GBTC is supposed to function is essentially each share of GBTC represents a fixed amount of Bitcoin. And essentially, you would hope and you'd expect that GBTC would trade relatively close to the price of Bitcoin, but that hasn't always been the case. Usually during bull markets, it trades substantially at a higher premium because everybody wants to get Bitcoin, and GBTC was the only way to do it for the longest time. So it'll trade much higher than Bitcoin, but as things slow down, the premium goes down. And so even in the depths of the bear market of 2018, the lowest the GBTC premium had ever gotten was about 6% over the actual intrinsic net asset value of what the share was supposed to represent. So it's got this deviating premium, and that's all because retail investors, funds like Cathie Wood, they all want to get this legal or like fund-approved exposure to Bitcoin that they couldn't get because there's a lot of rules that dictate you can't just, as an investor or wealth management, you can't just buy spot Bitcoin on behalf of your clients. There's legalese involved with that. So what basically happened is as the price of Bitcoin started to rip up, set new all-time highs, kind of late 2020, a lot of people realized, well, hold on. If we're just trading for ourselves, there's a business opportunity here because this GBTC is supposed to represent a fixed amount of Bitcoin, but it's trading way above where it needs to be. And at the same time, there are these Bitcoin futures markets where I can short Bitcoin. And so what essentially that creates is something called a carry trade, where you can be long one asset and short another and essentially collect the premium in the middle of whatever happens to that asset. And so I'll explain what that carry trade is here. It's essentially like this. Grayscale has a system where if you want GBTC shares and you don't want to just buy them on the open market, you can buy spot Bitcoin however you want, send it to Grayscale, and they will send you GBTC shares that are at their fixed net asset value. So let's just say if you wanted to buy, let's just say Grayscale Bitcoin shares are trading at a 30% premium over their net asset value. What you could do is you could send Grayscale a Bitcoin, and they would send you some GBTC in return, but the stipulation would be you can't sell it for 6 months. But just say 6 months down the road you wanted to sell it, it still had that 30% premium. You could sell the 30% premium and essentially make 30% risk-free in Bitcoin. And this was the whole thing, right? Like this trade was considered pretty risk-free for a long time, for years, really. And so essentially, let's break down how this works. So you would take one Bitcoin, you would send it to Grayscale, right? And so you intrinsically have exposure to just the dollar price of Bitcoin. And so what you would do is you would short Bitcoin through another derivatives platform. And so that way, no matter what the price of Bitcoin did, you'd have these GBTC shares you couldn't sell, but because you were short Bitcoin, you were kind of hedged just the underlying price of Bitcoin. So it didn't matter if it went up or down. All that really mattered is that there was still a premium investors were willing to pay. And as long as that premium was over 0%, you won the trade, right? Like you would make whatever this premium was. So what would you do? You would do is basically this, like 2018, I would buy a Bitcoin, send it to Grayscale in October of 2018, and then I would short a Bitcoin on a futures exchange. And basically I'd say, okay, I'm going to wait 6 months. So October, that takes us to about, let's just say March of 2019. And the GBTC premium is 27%. You would sell your GBTC shares once they unlock, and then you would close your short. And essentially you would just capture 27% right there. So again, super lucrative. And essentially, this whole way of doing this trade was the basis for almost all of these yield platforms and crypto lenders, because it was, again, risk-free yield to make this percentage. But obviously what happened, and what always happens when things are too good to be true, is everyone piles onto the trade. And so as Bitcoin was making new all-time highs in 2021, every single company in the book that could get money started going into this trade. And companies went so far as to borrow money from people to do this. You know, money they didn't have, just on, you know, the promise of, look how well this trade has worked out for this firm. I can do it with your money. I have access to all these different products. We'll short a Bitcoin. We'll buy a Bitcoin, send it to Grayscale. We'll collect a premium. We'll give you 20%. It worked so well that basically a ton of these yield companies, Gemini Earn, BlockFi, Celsius, all these companies popped up, Three Arrows Capital, and I think almost every single one of them has done a GBTC carry trade. Some of them maybe not Nexo, maybe not things like Ledin, I don't know, right? But it was a very popular trade for a while. Now, that's all fine and dandy until the price of Bitcoin kind of starts, that's all fine and dandy until everyone is in this trade. And essentially, as everyone is in this trade, the premium goes down, because essentially you have all these people that are funneling Bitcoin in, and they have all these GBTC shares. But now there's more people that have locked up GBTC shares than there are people who really want to go and buy it on the market. And the thing that made this cycle very different from previous cycles where GBTC existed is now investors didn't have to buy GBTC in their brokerage account to get exposure to Bitcoin, right? They could buy MicroStrategy. They can buy these miners. They can buy, maybe ARK-K. They want to get some exposure to other things. So the demand for this particular product sunk, but the supply kept growing because all these funds were doing that, that transaction and capture that premium. And essentially you just had this misbalance. And that has been what's caused this negative premium going on here with GBTC that got so bad that essentially one Grayscale Bitcoin share was almost trading at half as much as the net asset value. All of these funds basically, as one bankruptcy after another started to pile up, Three Arrows Capital, FTX, all of these things, were really bad. BlockFi, all of these hedge funds had to exit that one trade everyone was in. And so, of course, they have to wait their 6 months or a year to exit GBTC. But as soon as their shares are unlocked, they just have to dump them. That's all they can do. And there's no real way to hedge in the other direction as well. So, yeah, because it's not really possible to short GBTC from what I understand. I could be wrong, but I guess if you could short GBTC, you could go long Bitcoin, short GBTC, but I just don't think because it's a pink sheet stock you could have done that. So essentially no one really did the other way trade. Okay, that's a lot to kind of intake, but that sets the stage hopefully for understanding a little bit of the reason behind a lot of the collapse in the yield platforms. So fast forward to today, Luna collapses, pulls down 3AC, pulls down Celsius, Voyager, all these different lending companies, because they're all trying to make money on the back of this and other schemes to generate their savings accounts or yields, right? And so essentially Genesis Capital, which is the #1 loan provider in all the crypto ecosystem, they're loaning to every single company you can think about. They get caught up on this because if you have a loan to a company and that company goes bankrupt, if your collateral that you're holding, or if it's an unsecured loan, it's really bad. goes under, then you're just not going to get that money back that you lent out, right? And so big holes in the balance sheet, and usually, someone comes to fill the hole, or you have some type of collateral if it's an over collateralized loan to kind of take the heat off things. But just a lot of margin, a lot of leverage, and essentially Genesis Capital, which is kind of the behind the scenes firm that was doing all this crypto lending, has a giant $1.2 billion hole in its balance sheet. And so keep in mind, Genesis is a parent company to Grayscale. Oh, sorry, not Grayscale, Digital Currency Group. So you got Digital Currency Group, and you got Genesis, and you got Grayscale. And so what was happening is essentially in the background of all this trouble, Gemini was coming out and saying, oh, this company went bankrupt, but, it's not a big effect on our balance sheet, right? It's not really a big deal. We have a $12 million hole. And then all of a sudden they come out next week and they say, actually, we have a $40 million hole. And actually, no, wait, we have a $200 million hole. And then they stop talking, and then reports come out from leakers from within the organization saying, no, they have a $1.2 billion hole. And then all of a sudden, Genesis says, okay, all these rumors are coming out, FTX is down, we're going to stop withdrawals. So if you're a client of ours, you can't take out any more money. If you've loaned us something, we're not gonna let you take that out. And so they shut down kind of a little bit. But the big difference is that they don't go bankrupt. They don't declare bankruptcy like BlockFi and FTX and all these other companies pretty soon after the bank run. They just kind of zip the lips and say, we're working on a solution. Because they're not so retail focused, they decide, well, if we just correspond with all the people who are invested in us, we can work out the situation without declaring bankruptcy. Because the hassle with declaring bankruptcy is essentially you're exchanging legal protection for custodianship of your assets. So when you declare bankruptcy, a trustee of some sort, lawyers basically hold all your assets, and it makes you immune from further lawsuits. But they figured, we can get out of this bind. We don't want to give this over to other lawyers and things because that process can take forever. They can find some stuff in discovery that doesn't look good. Let's just try and keep our doors open, but we'll just make sure we're communicating with every single one of the people that we have loans with to not sue us, right? But time's a ticking, right? And so if you prevent people who have billions or millions of dollars to take any of it out, the pressure cooker just builds up. And it built up to kind of this fault where Cameron and Tyler Winklevoss, who own Gemini, are basically putting out this letter saying, look, we have this program called Gemini Earn. We took $900 million of our clients' money and we put it into Genesis so they could generate yield. We could take a cut of that yield and then give them the rest. And they come out and they're just kicking and screaming and saying, you guys haven't given any communication to us whatsoever. There's no terms that you've put out that have kind of worked satisfactorily. And we're representing 340,000 users here that haven't been able to access their funds because Genesis is frozen. And so they're trying to put all the blame on a Genesis, not taking responsibility for the fact that they essentially put all their money into one place and expected an easy return. Not taking any responsibility whatsoever, that essentially they're still responsible for their client's fund at the end of the day. It's not just Genesis who they've lent to. So they write these big letters, and I'm not going to go through them right now, basically saying, look, you guys need to come up with something really quick. You need to answer what we're saying. And especially Barry Silbert, who's kind of the puppet master at the top of these organizations, he has to do something here, right? And basically they get a no response from Barry Silbert, and then eventually they come out with another letter. There's a lot of back and forth here, and I'll link this article below where you can kind of follow what's going on. And again, Genesis is basically functionally bankrupt. There is some chance or some idea that one of Barry Silbert's companies under this Digital Currency Group umbrella might be able to fill in the gap. But the problem is most crypto companies right now are not liquid. They need to have the assets to pay back. You can't just run a company with a hole in a balance sheet like that, especially if you're a lender. So they need $900 million of assets. And it's pretty apparent at this point that nobody is going to take the risk to be involved with this. There's no upside for investors to lend Genesis money and help them see through this situation so that maybe at one point they'll be profitable and they can fill that hole in their balance sheet. It's just way too risky. And so it looks to me essentially that Barry Silbert is just trying to buy as much time as possible. He's doing a really, really poor job of it. And essentially, I think in the next 2 weeks or so, there will be a decision on the solvency and the bankruptcy status of these companies. And so, I don't know, we're waiting, the clock is ticking, and then all of a sudden here at the last minute yesterday, both of these companies, Gemini, who represents all the users, and Genesis, who's the one issuing all these loans, both sued by the Securities and Exchange Commission over their lending programs, essentially on the same basis that BlockFi was sued $100 million for, which was that you can't just offer somebody a product and then say that it's going to return this much without registering it as a security and undergoing laws and things like that, which require you to disclose in as much transparency as possible what you're actually doing to generate that said yield. So you cannot just say to someone, I'm going to make you 5 or 8% and then sell this idea of that product to a bunch of people in the US and not disclose things like your earnings, who exactly your counterparties are, what rates they're paying, and all the other risky things in the business. You just can't do that. And BlockFi was sued for it earlier, I believe, this year before they went bankrupt. And for some reason, a bunch of the other loan companies in the US, the ones that didn't go belly up immediately, just thought they could just keep operating like normal. And, the precedent was set, and they just kept running the show. And yeah, so essentially they're just both being sued now, which is essentially, I think, also just going to turn up the heat and the speed at which Genesis has to declare bankruptcy, because they're going to have to fight the SEC now. And at least under bankruptcy, I think they can delay that inevitability of having to face charges for that. But the big issue now is that if the SEC is suing Genesis for this, that could make the solvency problem even worse, because there is going to be a fine attached to all this when it goes into the courts. So yeah, long story short, there's almost nothing new to this, because we know that basically the entire loaning ecosystem in the cryptocurrency space was 100% unsustainable. In hindsight, it's so easy to say that in hindsight, right? And I'm not going to act like, I knew this from the beginning. I didn't do my research. I ended up losing money in FTX. I didn't lose money in the other yield platforms. But at one point I made a video saying, oh, check out BlockFi, they're 6% yield and this is how they do it. But obviously, this stuff's way more opaque than I thought it was. I thought it was pretty simple and clean. And I totally underestimated, how shady some of these backdoor deals were. And it's all coming to light now. But, moving forward, there's only one type of yield that I would, functionally consider loaning my Bitcoin out for. And that would essentially be an over-collateralized loan where you could audit the the smart contract or code to see what happens in the event of someone defaulting, so that there's no confusion as to what happens if the person doesn't pay back their loan. If the person doesn't pay back their loan, you get your collateral. Maybe it's a certain date they have to pay it back. So I think there is a future in lending. I don't think that all this, stuff that's gone on with these centralized lenders means that no one is ever going to lend Bitcoin or stablecoins out again. People will always search for yield, but in the future, I think what is essentially going to happen is that the platforms that didn't go insolvent were some of these DeFi platforms that had these auto liquidation features. And so they're not bulletproof either. They've had a lot of problems. But there are going to be people out there who want to take a loan out on their Bitcoin at some point. One of the things I was talking about is based on that as well. And there's people who, might be hodling for years. They have a lot of their net worth tied up, and they want to get something similar to like a home equity line or a Bitcoin equity line. And so those people will be willing to lend out their Bitcoin at an over-collateralized rate to get dollars in return, right? And there will be parties wanting to do, vice versa for that, looking to borrow the Bitcoin and willing to give dollars to do it. So there is a future for this stuff. It's just going to be in a completely different form than it is now. And as long as we're in this situation where we are now, or this stuff's kind of quiet, there's not a whole bunch of Bitcoiners looking to get yield on their thing. The majority of Bitcoin holders are just going to wish that they could get an interest rate on their asset versus, wanting to borrow more Bitcoin, right? So that imbalance basically means that the rates for, Bitcoin yield essentially for most places are going to be effectively zero. There are companies like Ledin out there that, a lot of their loans are just backed by people trying to borrow against their Bitcoin or leverage their Bitcoin to buy more Bitcoin. But those are going to be the exceptions. And again, because the pool of people willing to do that is so small, those rates aren't going to be that high. So yeah, interesting to see what happens. My prediction is Genesis. End of the month, I think they have to declare bankruptcy. I would be shocked if they don't, but I don't know. If anybody wants to take the over-under on that, I'd be willing to bet $20 that Genesis claims bankruptcy. So if you want the under on that, let me know. But yeah, that's it for today's stream. Thanks so much for watching. Let's see. Did you guys get the number? Yes, you did. And you got to send me an invoice. And it looked like Amanda sent it first. I don't have any Twitter DMs, do I? Let's see. Amanda sent it when? When was this message sent? $132. Okay. I think Amanda got it first here. So you sent me a Bitcoin invoice. So I'll double check it after the show, make sure it's for the right amount. But if it is, you're good to go. You got it, Amanda. Sweet. Yeah, what else? Demand side, egg futures. Yeah, $8 for free range. Are these US prices for? I'll pop up the chat so people can visually see what I'm talking about. Whoop. The bunnies have lettuce inflation. I agree. Lettuce is ridiculous. Who else is paying $6 for a head of lettuce? I feel like lettuce is so easy to grow too. Like, I don't know. I haven't grown it before, but, you know, keep it protected. I imagine like bugs and aphids are kind of the biggest problem with it, but, you know, it's just like a leafy green. A head of lettuce takes like 70 days to grow. So, I don't know. Maybe I'll do that. Because $6 per head of lettuce is just crazy. Nuclear power for the home mining rig. Yeah, modular nuclear power for the home mining rig. Nuclear energy is really going to change the mining game. I'm really curious what country will be the first to do that, because I think nuclear is a situation where there is going to be an excess amount of energy at the source. But one of the challenges with nuclear too is it's so expensive to set up initially that, you know, to monetize that energy right off the bat, if you can't sell it all to the grid, you really only have one other option, and that's mining. And so, you know, it'll take a lot of money to, or it'll take a lot of Bitcoin to pay off the expense of building a nuclear reactor, because I believe, like, even the smallest ones are at least $1 billion. But it could be a good investment for a nuclear energy company. So we'll see. Curious, what countries are in the forefront of this? I know China is building so many nuclear reactors. I think eventually China turns the page on Bitcoin and unbans it again, only to ban it in the future. But I wouldn't put it out of the question that they unban it, because they realize the potential of being able to monetize some of these energy plants when they have excess. A minute too slow. Sorry, TGEM. Next time, I'm gonna send some DMs around and see if I can get some companies to help fund these giveaways. But we'll do a few more in the future. All right, Amanda, I'll give it to you, even though that's not a Lightning invoice. But what you should do is you should go to Moon. You should go and get a wallet called Moon, and then MUUN, and see how that works. I can still send it to that address. I'll just put the custom amount in. Do you think we're hitting 20K by this evening? Oh, snap! Another leg up. Man, well, that's nice to see. As someone who has like a disproportionate amount of his net worth in Bitcoin, it's nice to see it go up every now and then. It's pretty spectacular. Yeah, Bitcoin pumps on the weekend are always kind of a tricky thing to watch out for. It's very overbought. If you're looking for a short-term trade, I would say like don't buy, but I don't know, man. Look at this. We got 2 months to stack sats here at basically a tiny, tiny range, and we're breaking out of it, which essentially leaves us in the dust for a while. My prediction is the bottom for Bitcoin is in for at least a few months. There would have to be a really brutal black swan in the market to pull us any lower. If tax selling and FTX only got us like barely $2,000 under our last bottom here, and that was like, whew, that's a lot to go through. If $2,000 is as deep as it can go past that point, which is maybe like 10 or 15% lower than the previous low, I think that bottom's in. So I will bet that the Bitcoin bottom is probably in for this cycle. I think like last time the Bitcoin bottom was in, it was like 3,000 in 2018, 2019. And then we tested that low, which nobody thought we'd get to again in 2020, but it was on the back of a black swan, which was COVID. And then, as soon as we hit that, within like 2 days, we're back at like 6,000, 7,000, and then it's off to the races. So I really think at this point, I would put a 85% probability that the bottom for Bitcoin is in for the next few years. And if I'm wrong, I'm wrong, but that's just how I weigh the odds. I would say 85% certainty that that low is in. I just don't think that like slowly deteriorating conditions in the market will take this much lower. It will have to be something kind of cataclysmic that really freaks people out. And they're going to also have to be inclined to freak out and want dollars, right? Like they're not going to just freak out about Bitcoin. They're going to want to look at the dollars like a safe haven in any type of like black swan event. And if we're going to stay in this inflationary environment, then maybe the last thing you want to do is run to dollars. So I don't know. I wouldn't bet against this, but I have stacked stats, so it's good to go. You download Moon, sweet. Yeah, so on Moon, I think basically you can just go. Let me just see how this works. Tech support on air. I gotta cut the stream in like a minute here, but I think on Moon, essentially, you just click receive and then Lightning, and then you go invoice settings, and then you just enter the amount, and you can enter it in like BTC or Sats or whatever, and then just send over that. It's going to be a longer code or a QR code or whatever, but just like DM it, and then you're good to go. All right, gang. Thanks so much for tuning in. I hope you liked this show. I hope you learned some stuff about DCG, CPI, all that. We'll be back next week, and more videos on the way too. The videos from Guatemala I'll hopefully get one of them out in the next 2 weeks. But yeah, some really interesting stuff there with another Bitcoin circular economy. So I'm excited to show you what that all looks like. Thanks so much for tuning in. Take care, and I'll see you next week.